I'm joined today live at MIPIM by Thomas Veith, who's Global Head of Real Assets at PwC. Thomas, thanks very much for joining us. It would be good to get your sense of, I suppose, in terms of the launch of the Global Emerging Trends report. So maybe just some of the highlights from that.
Yeah, thanks, Richard. Great to have the opportunity to present the Global Emerging Trend, which is, let's say, covering the three regional reports we've presented end of last year and now updated with some additional interviews on the global trends. We have seen that the transaction activity came back. You see the numbers for 2020-24, and that gives a good basis for the slightly slowly starting capital markets and transaction volume outlook for this year already, 2025 and beyond. Looking at the key concerns, I think that's important to mention in the regional report and in the comments. You see a wide range. So starting in Americas, you see the top two concerns are about the development of the interest rates, and the second most important topic is about housing availability, affordability. Looking at Asia Pac, it's about the low yield environment in context of the increasing yields for bond rates, etc. That's something, and of course the international risks that are coming up. And looking at Europe, the top two concerns, which is not such a big surprise, it's all about political instability, the trend to the political trend towards the right, and of course the potential escalation of war. Of course, we also look at the potential interest rate increase, but that comes lower ranked in these priorities we've just discussed. So again, it's overall globally slightly improving transaction activities, but with a different view on the topic concerns.
Thomas, in terms of sustainability, that's obviously a big topic at the moment. How did that come out in terms of the report?
There's a mindset change, as we have seen for the last 2 or 3 years. The trend towards regulation, ESG was often driven by, or sustainability was driven by the regulators, where we already heard that the bit of frustration that is so overregulated and it's not really the business case. And that's a clear ask, especially in this more tricky, challenging environment for transaction activities, which is getting better, but it's still on a lower level. It's that the investors asked for the return. So it's not ESG and sustainability is there, and we see the changes, we see the floodings, we see the wildfires having a real impact on the real assets because they are damaging this, they are more at risk. But we have to prove that there's also a return on investment on this investment, which we can prove. Yeah, you can see big topic is insurance premiums, especially now in the US, and the general topic of insurability and the gap of assets that are not insurable anymore in the future is really widening, and there are more than 1 trillion assets damages in the US that were not covered. So the discussion between the insurance industry and real estate is picking up in the US. I haven't heard so much on this topic in Europe, but having interviewed some of the participants, they say, yes, we still have a coverage overall on the portfolio, but the insurance companies telling us some of the asset might not be insurable going forward on a standalone basis. If you don't get insurance, in Europe you can't buy it from a governance point of view. In the US, for example, if you don't get an insurance, you don't get a mortgage. That's a change. ESG is there. We see the impact. It's more important, but we have to be more looking for the proof. Where's the return? Where's the higher rent? Where are the lower cap rates? Where are the lower operational costs? But that's not a problem. We have just to be more transparent as we've been in the past.
And we've talked a lot there about some of the trends that you're seeing, but what about the opportunities in terms of the sentiment and the investment side?
It's clear the opportunities on the intersection of real estate and infrastructure. We have seen the trend. Yes, more data center, more energy infrastructure, and this is now really moving closer and together, that everything that involves battery storage things into the real estate, bringing real estate more as part of the solution of the energy issues, also more independence of the real estate on the industry side, so having more solar panels on the roof and having more independence and resilience going down the road. I think these are the core challenges on the asset level, and the other trend is that as we see all these changes in digitization, sustainability going down in different asset classes now, as I said, more into infrastructure, there is a big ask for more education of the industry. So really training all the people, get to know the new trends, the new things they have to do, because the business model is really changing from what we have done in the past, buying and selling assets, perhaps renovating a bit, constructing, but now it's more really understanding the operational topics. How can I optimize my business by using artificial intelligence and technology, but also on sustainability, to be really pragmatic, what works and what doesn't work really well.
And one of the other key trends, I guess, at the moment in real estate is artificial intelligence, innovation. How do you see that influencing the real estate and real asset side?
It's a topic which is on every agenda, and there we have seen for the last 2 years or last year big talks about AI and the potential impact. And now, like always with new innovation, there's this J curve. Yeah, we have to go through a hype phase. It's the same like sustainability 2 years ago. We started, we have to do it, we have to do something. And now it comes down to the point where what really makes sense to us. And AI is a big game changer, because still in our industry on digital transformation, we are far behind to other industries. And on top of that, AI and Gen AI can help us so much to improve efficiency, to really find new solutions, for example, energy optimization. It's really the AI is telling us what we could do better or suggest things we could do better. Architects are working with AI to get really new creative solutions on the ground. And we see, again, it's a bit looking at the regions. In the US, we see the really big players are going bold for AI and digital transformation, because it's about big spending. Yeah? They're willing to spend. They see the opportunities to bring down operations costs on a corporate level, but also on the asset level. And that's something we are in the, let's say, in the European world, the same in Asia Pac, we are missing a bit. If the really big global players are doing that, they will always have a competitive advantage on the cost side, because they're digitized. They can improve their margin, they can even lower perhaps their prices without losing money, and that gives an initial push into the, let's say, wider industry, mid-size asset managers, developers, if they don't follow this trend.
Really interesting to catch up. Thanks very much for joining us.
Thank you, Richard.